With traditional portfolio construction techniques, such as the 60-40 portfolio coming into question, is there a case for investing thematically? Although still a relatively nascent area, assets in thematic funds have more than tripled to $595 billion worldwide, up from $174 billion 3 years ago. The COVID-19 pandemic has also resulted in mass inflows into thematic strategies, paired with eye-catching returns in certain funds. So is it time for thematic investing to become more of a core focus for asset allocators? Do you think thematic investing is replacing investing by countries or sectors, perhaps more traditional ways of asset allocation?
So replacing? No. Is it challenging the fundamental assumptions behind those? Yes. As pleasing as country investing is, how much of a British company is BP, for example? How much of its revenues actually come from the UK? The pleasing thing about sectors is that any given stock can be placed in one of those buckets. But that's also one of its weaknesses. Whereas you could argue that Siemens would appear in a robotics fund, it would have robotics exposure, perhaps innovative healthcare exposure. So one stock may have exposure to many different themes. So it's a slightly different way of slicing and dicing the universe. And I think very few people would disagree that these huge secular shifts in the world are actually driving performance returns of any given stock. And starting with that and working backwards is actually also a very pragmatic way of approaching investments. Almost all of these funds are equity funds. And almost all of them are looking to boost returns rather than reduce risk. So if we can sort of exclude the fixed income portion of the standard allocation. Essentially, you would be adding this into your equity allocation and really looking at which other exposures you have within your portfolio and balancing them off against each other.
What do you think are the major risks of thematic investing?
The biggest risk I see, having worked on theme funds for 20 years now, is you get too correlated to one factor. That factor then plays out and where do you go? So this is why we are multi-themed, not single-themed. We've seen that before with ag and commodity funds. It's not just about what the company does, but who owns it and how a lot of these themes or holdings are traded. And we see that at the moment with ARK.
One area which has been talked about a lot in the media and looked at by us as well is the liquidity of these products. To fish for the highest potential returns, it's very tempting to drop right down the cap spectrum. And if you're really trying to capture the growth potential of a developing theme, let's say something that's really coming to the edge that you want to take a bit of a punt on, like psychedelics perhaps, but really to capture that growth, maybe you want to be there at the beginning. You want to be fishing right on the edge of the private markets. But of course, this in itself comes with its own risks. So there's definitely a trade-off there between capturing the purity of a given theme and potential liquidity considerations. But I would say it's actually investor behavior, which is the biggest risk. This huge wall of money that's gone into these funds is chasing returns, and any investor has to ask themselves, am I sort of too late in this? Is there something about? Do people not know about robotics? Is there something that the market has mispriced here, or is this actually correctly priced or even overpriced? Investors are the biggest danger to themselves. They have a tendency to buy at the wrong times and sell at the wrong times. So the best way to use these funds as part of a broader portfolio, understand how they can actually, the lack of correlation with other investments can actually reduce your overall risk, and potentially you can capture that sort of long-term growth of your given theme.
How has the pandemic changed approaches to thematic investing?
The approaches have not fundamentally changed. We're still using AI, for example, or more automation to select and to pick these given stocks. But this was just a trend which was already sort of moving forward. The big change that the pandemic has precipitated in the market is just a bigger interest in these funds and a bigger interest in thematic investing. We've seen a wall of money flowing in almost every geography. The pandemic has really highlighted and speeded up some of the technological developments that were already there. So cloud computing has benefited, blockchain, Bitcoin has benefited. For slightly different reasons, alternative energy has benefited. So some of the very best performing funds over 2020 of any sort were thematic funds.
A number of our themes were really, in effect, accelerated by the pandemic. So some of the technological themes like explosion of data or platform companies, things like health and well-being, again, because the nature of the pandemic, and then areas such as automation. So I think the thematic investing is fast forwarded in effect, and people have seen the benefits of it. And there's a realization that this is not just a fad.
3 or 4 years ago, no one was talking about thematic investing. With the exception of Japanese investors, most investors in Europe and the US haven't really been as focused on it. I think what's happened with the pandemic is we've been living through it. We've seen how themes can be adopted very quickly. We've obviously changed the way we've worked in the last 6 to 9 months. There have been clear winners from a stock selection perspective on if you like, the lockdown winners, and there's obviously been losers on the other side of that.
You mentioned a couple of themes that have been accelerated by the pandemic. What about the flip side? What hasn't done so well?
Some of the themes that have maybe been more in the eye of the storm have been the service economy. This has been very much a service-led recession rather than a manufacturing recession. So there's this secular move towards services, but in the short term, that's taken a pullback. But we think there's a lot of pent-up demand there. At the height of the pandemic, we saw a curtailment in areas like real estate and infrastructure. Now, coming out of that, we're seeing a huge construction boom because there's huge pent-up demand in areas such as housing, for example. But for a period that was put on hold. And then even the aging demographic theme, which is a long-term tailwind, there was a number of areas, be it hospital procedures that were deprioritized, things like heart transplants, that cater more for that demographic.
It's not a quick case of which themes have done poorly insofar as when I think about how narrow the market became. You know, I'm not going to say these 3 themes like healthcare didn't do well or you know, autonomous driving didn't do well because people weren't driving, all those things, because that's not particularly relevant. What's relevant in that period of time is we got so narrow where essentially 5 stocks in the S&P represented 25% of the market cap. And that didn't mean those other themes, if you like, which I think are more long-term and structural, didn't work. It just means they need more time, if you like, to feed through. The whole idea of thematic investing shouldn't be expressing yourself, you know, over 3 to 6 months. It should be over 5 to 10 years. The problem is you say this theme did value as period. You might say, well, I should invest in that theme. Education, for example, could be a massive theme over the next 10 years, but wasn't necessarily a feature relative to performance of, say, an Amazon.
What's the performance of thematic funds been like the equity funds?
The last 3 to 5 years have been really very good for growth funds and very good. We've seen a huge number of these funds launch, and you wouldn't expect to see many of these new launches closing straight away. So we've seen, if you want to call it a success rate, which is survive and outperform an equity benchmark over a given period of time. You know, we see this really quite high over 1 year and 3 years. But as soon as you start to go out into really, really longer term sort of timeframes, you start to see this really drop away. And it's driven by fund closures. I mean, clearly, if they don't capture the assets, they're going to close eventually. And with so much product coming to market, we don't anticipate this changing. In a nutshell, over the long run, the survive and outperform rate of broad benchmark has not been great. There's obviously this buyer beware element with these products anyway. So you've just got to be careful about which ones you pick, which fund provider you're sort of looking at. Will they be there, and will the fund still be there to capture the development over the fund over the long run?